Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and this is really big news about the Canadian housing market, which we have talked about so many times for years here at WAM. We've warned of it, and now the banks are starting to talk about how there's a serious risk and we could be facing down another recession. And first of all, if you're wondering, I'm in San Diego, so I got some weird window behind me, got the harbor behind me, the military industrial complex behind me, all that kind of stuff. So good times. Anyway, I'm going to get into this article out of the Huffington Post, which says Canadian housing market this bad normally means recession, according to BMO. And as the article goes into, residential investment is falling. And that's a clear sign of hard times in Canada's economy, the Bank of Montreal says. And as it continues, usually when Canada's housing market is this badly in the dumps, the country is in a recession, according to a research note from the Bank of Montreal. Canada's economy ground to a near halt at the end of 2018, according to data from Statistics Canada, with growth slowing to a 0.4% annual rate in the fourth quarter. Among the weakest parts of the economy recently have been anything related to the housing market. Residential investment, which includes building new homes and buying and or renovating existing homes, has dropped 7.5% over the past year, BMO senior economist Robert Kavsik said in a report earlier this week. And I quote, "Historically, declines of this magnitude in such an important sector have usually correlated with a broader recession," Kavsik wrote in a client note. He produced a chart showing a clear correlation, but not necessarily causation, between recessions and large declines in residential investment. Kavsik noted that 1995 was one false positive, but that wasn't exactly a jubilant time. That was the year of the second Quebec sovereignty referendum, and real estate markets in central Canada tend to be weak when Quebec talks separation. When Kavsik called residential investment such an important sector, he wasn't kidding. A recent report from CIBC noted that residential investment had become larger as a share of the economy recently than at any other time on record. The implication is that housing market slowdowns will have a bigger effect on Canada's economy than they would have in the past. The Canadian Real Estate Association reported that countrywide home sales activity was 4% lower this January than a year earlier. It was the weakest January for home sales in 4 years. Sales in the once hot Toronto and Vancouver markets were near their lowest point since 2009, while markets on the prairies continued to suffer from the recent upheaval in the oil markets. Montreal and Ottawa have been bright spots for the market so far this year, with sales prices on the rise. The likelihood that raising interest rates and the tougher new mortgage rules have taken the steam out of Canada's housing and real estate industries is one of the primary reasons the Bank of Canada appears to have put its campaign of raising interest rates behind it, at least for now. In its interest rate announcement Wednesday, the bank kept its key lending rate at 1.75%. It dropped earlier promises that it would eventually return to raising interest rates and said there is increased uncertainty about the timing of future rate increases. So, John, let's talk a bit about this because this is huge. We see the everything bubble worldwide. It's getting worse and worse by the minute, it seems. And this is all leading back to things we talked about for ages, including BMO, by the way, with their collateralized debt obligations and mortgage-backed securities, the return of so many things we saw in 2007, 2008. We also are seeing a lot of big names in the real estate space running away as fast as they can. We've been reporting on Vancouver and Toronto for ages. We've watched it hit peak bubble and start falling out as the floor beneath it gets pulled away. And we've also seen similar things in other countries like the United States. Where I am right now, San Diego has seen a huge drop. These are all symptoms of the same problem of centralization, banking, manipulation, spoofing, and basically just market manipulation overall. John, can you go into this?
Well, so what's going on here, Josh, is of course in Canada, it's what they are blaming now is the new mortgage rules that have come in, and the new mortgage rules, they actually show that you have to qualify to with your debt and everything to actually have 2% to be able to pay an interest that's 2% higher than what you currently are getting as an interest if it's a variable, or It's either also it could be the 5-year average interest for a 5-year term mortgage, which is currently at 4.89, or whichever one of those is higher. And then of course they additionally, they have a total debt ratio which is 44% of like versus your income and so on. And then you have if you spend less, you need to spend less than 32% of your income on housing costs such as utilities, mortgages, and the real estate taxes. That like 32% of your income goes to that. That's crazy in the first place, but that is actually the qualifications that banks let you have. Now they don't even look at other debt like car loans, like credit cards and so on in that measure, of course. So yeah, no, it's what has ended up happening is it's a big bubble that has been been blown forever, Josh. And what's interesting, you were talking about Toronto and Vancouver. What's interesting here, I talked to one of the top real estate agents here in town just recently, and he was telling me how there is a ton of investors and real estate people that are moving into Winnipeg now because of the panic that they're losing their shirts and don't make any money out in Toronto. So now,
of course, that makes so much. That makes a lot of sense because we're seeing that in the States with California and New Jersey. Californians moving to Arizona and Nevada, New Jersey moving to Florida. I mean, that's a huge issue with cities and towns across the world that are seeing these massive housing bubbles. Everyone's offloading into these other areas, which eventually will lead to the same problems in those areas as well.
Well, actually, there is a big problem here in Canada. I was just recently on the news today. I was listening to CJB because I follow a little bit of mainstream media, and they were talking about how actually delinquency rates are the highest in the country in Manitoba, of all places. So that doesn't help, and of course, Manitoba has also the highest credit card rates per capita when it comes to money that they racked up on credit card debt of all the provinces in Canada as well. So yeah, you could shift the bubble from one place to another, but you're just gonna blow that bubble up and it'll explode here as well. So there's no help there, and of course the economy will be slowing down because when when housing prices goes down, the mass amounts of income that the government is relying upon, and that's why they've been pushing up real estate prices first and foremost, is because of taxation. They get huge property taxes on all these developments, all these houses, everything that's happening in the real estate sector. That is a mass income for the government. And then second, of course, it's the stock market as well. They push money in there. They get capital gains tax a lot of the times on that. So that's why it's been focused on, keeping that cheap to prop up those markets to, again, give money back to the government. Meanwhile, they're still running massive deficits and they don't even have enough income from the taxation, Josh.
Yeah, well, John, I mean, looking at the past here a little bit, because obviously like I mentioned, we're seeing the return of a lot of things. The subprime mortgage lineups are a big sign of this. And obviously, when you have this massive amount of bubbling happening in places like Toronto and Vancouver, which were so insanely massive, and we've done reports recently breaking down how they've fallen, obviously you're going to end with the climax of the whole situation is not going to be good for anyone. And of course, debt dependency is a huge problem, as if they push you down a bottomless pit of debt, they force you to ask for a ladder up from the government and the banking system, which puts you into perfect servitude to them, the banks. And of course, going back to 2008, it never ended. We see this everything bubble here. It was pushed off to a great extent in Canada, where we see this whole bubble get propped up to the extent where it's just going to come down harder long term. But John, can you go into a bit about what we're heading towards right now and what we can expect to see in the near future, as banks kind of cover themselves and say, oh yeah, we've seen this all along and we're warning you at the last second, even though they've been propping up this system for so long? Can you go into that a bit?
Yeah, well, let's go back to 2008. What happened here in Manitoba in 2008? For people that live in Manitoba, a lot of them have said that, oh yeah, there's nothing to worry about. Well, actually in 2008, when the financial market crashed, one of my friends that was one of the biggest real estate investors here in town, he lost his shirt on a lot of projects, and he was telling me the story how he almost got eviscerated because of the 2008 crash that they didn't really see coming at that time.
Mm-hmm.
It was all exciting, real estate prices going up, everybody was excited about it, but then actually something happening down in the States. $13 billion worth of delinquent ninja loans cost a trifecta of effects everywhere in the country. In Canada, they had to bail out the banks in Canada. Nobody's talking about that secret bailout from the TARP fund, of course, which I talk about in my book, Canada, the Greatest Economy in the World, and a whole bunch of others. I predicted this whole thing with the real estate markets. It was funny when my book came out, Josh. It was right at the top of the bubble in both Vancouver and Toronto,
and everyone said, "Oh, you're crazy."
Yeah, no, and that's what happened. But like, look at this here, for example. This is just an extension of how bad it is when they put out something like this. If you go to loanscanada.com and you actually can look at different loans that exist in here in Canada, you could get something called a vehicle title loan, which is basically a home equity line of credit on your house. So your diminishing value of a car, you could actually lend money, borrow money from that, which is totally insane. It's ridiculous, because why would you borrow money from a actually devaluing object? That doesn't make sense at all when it comes to business wise, but it makes sense for the bankers because they need more debt created, and they don't give a crap about what the quality of that credit is, as long as they can keep on creating a lot more credit. They just keep on indebting people, and because they get a little bit of fees here and there and transaction
time
fees,
for your 18th chance loan.
But that's how they do this. This is their business model. They print money, then they make money off of interest and off of the fees on all kinds of different arrays of things. And that's how the banks, bankers like Jamie Dimon has become a billionaire. Doing a service, it should be a service to the population, just for transactional purposes into the free market economy. But no, it's heavily manipulated. But yeah, so let's get back to what I see coming. I actually see a lot of it right now here in Manitoba even, and we are not at the top of the bubble here. What I'm seeing, which is very worrisome, I talk to a lot of business owners on a daily basis through my job that I have, and what I got to hear is people saying like, oh, I can't afford this. A lot of people don't even pay their bills to the company that I work for right now. And you're seeing a lot of these worrisome things where you have big corporations that were no problems on actually paying some other people that I know that are dealing in some very big corporations. They are even starting to struggle here in Manitoba as well, because what you're seeing is a slowdown of the economy. People are getting really worried, and when you get a slowdown and when you don't get that massive debt creation, there's going to be a problem, because there's not more debt to buy off the interest, and that interest is you got to pay that interest is due, right? So what's going to happen is you get delinquency, you're going to get bankruptcies in a whole bunch of sectors that are overly indebted, and there's so many of them here in Canada. All the corporate sector is almost every single aspect of it is massively indebted. You got just the private people in itself. You got massive credit card debt. You got a housing debt on a grand scale, and of course Canada's at the top when it comes to private debt to GDP, which is close to 200. Well, it's over 250. I think it's 267 or something right now of GDP. So that's almost 3 times the actual GDP. And then you have the government doing massive, deficit spending, because what that does, even though the Bank of Canada is doing quantitative tightening and trying to sell off some of their assets, on the other side, the government is spending so much more money into the economy through deficit spending. What's funny? There was a report coming out saying that, Canada. I think, did we cover this, Josh, or am I totally forgetting that? Where we were talking about how the government was actually, telling us that, it's the budget is actually almost balanced right now. Meanwhile, you actually see when they report all of their budget is right at the 31st of March, which is basically their last reporting date of their annual cycle, and that's when you actually get the numbers. So it looks fine now, but then of course every single time it's like a massive, like a negative
Of
at that
course.
end, and then it puts it into a huge deficit again. So yeah, no, it's just ridiculous how they're trying to play this, and of course Polos is coming out and saying that, oh yeah, it's kind of worrisome what's happening here. What was it? 75% of all economists currently are saying, yeah, we'll see a recession most likely in 2021.
And recently there was an article from a major mainstream media that said the crash that none of us saw coming, or the dollar dip that none of us saw coming. Meanwhile, so many of us have been talking about this for so long. Do your research, guys. Well, of course, it's mainstream media. They won't. They just parrot the same nonsense.
Yeah, I guess it doesn't watch YouTube, Josh, with a whole bunch of people that have called it. I don't know, like
So obvious, basic
I probably
economics.
know at least 100 people that have called this bubble. And of course, you got these bozos saying that it's like, yeah, there was nobody saw it coming. Well, yeah, maybe it was none of those idiotic academic bozos that are sitting on their pedestals, trying to educate the populace and trying to manipulate the economy.
And they're talking about the same thing that, for example, they think that the Canadian dollar is going to fall to 71 cents on the U.S. dollar. Guys, it's a race to the bottom. It doesn't really matter one way or another. One isn't less valuable or more valuable in the end. They're all fiat currencies. They're all falling. All fiat currencies eventually revert to their true value of zero. They always have. They always will. Going back to 1024 AD in China, and this time's no different. And of course, you have the hidden cost of living, the price, the tax, the inflation, where everything is getting more and more expensive all the time, and people don't know what's going on. While regulations and taxes grow, property taxes, which means you don't really own your house, it's just communism, really. And then you have all these bubbles that are all coming home to roost at the same time. You got your auto bubble, pension bubble, you got derivatives bubbles, you got your housing bubble, like we've talked about. And the derivatives bubble, by the way, is multi-quadrillion dollars worldwide. Ridiculous. So what are we going to do? Are you going to depend on governments and banks, the ones that are creating these problems? Or instead of trying to cure cancer with cancer, how about we fix it ourselves? There's more solutions than there are problems in the end. It comes down to you, all of you, doing whatever you can to understand money, because if you control your money doesn't control you, and you have complete independence and financial independence and self-sustainability. That's very important. Being responsible is what it all comes down to, and it's individual responsibility, not collective responsibility of an organized crime gang to extort us and push us into servitude, because that's where they want you. You should break free from that. You shouldn't allow that to happen. Stop being a pushover. Stop being a slave. It comes down to food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. Of course, gold and silver as wealth insurance, not meant as investment advice, folks. This is just obvious historical fact. It's wealth insurance, preservation of value as dollars crash, as fiat crashes, as it always has. And stop trying to repeat the same problems over and over again, like we've seen in places like Zimbabwe and Venezuela and in Argentina and all around the world, China, the United States, of course, as well. Folks, we need to focus on this as individuals, save for ourselves, understand this problem, and then take the proper solutions, which there are many of, so many of, it's impossible to count. And then, of course, there's decentralized, properly fundamentally valuable cryptocurrencies and blockchain infrastructure technology, which can really replace governments and banks if we know what we're doing, as long as we take heed of this market, we understand this market, and we move forward with this market instead of being scared of new things and allowing the government to take over this idea with digital currencies, cashless society, which is a totally different situation than decentralized, cryptocurrencies that we could actually use for payment in places like, for example, Venezuela, not Petrocoin, Dash. Petrocoin isn't even really a thing, it's just made up. Dash is a real thing, though, and people are using it in mass in Venezuela, helping themselves aid the problems of centralization, central banking, government, etc. So we need to take it upon ourselves to make these solutions realities for ourselves. John, as we close this off, what's your bottom line?
Well, the bottom line here is we got to kind of prepare ourselves for what's coming. We've been talking about this for about 3 years now, since we created this channel, a little bit over 3 years. And we tried to educate as many people as possible of what's coming next, because we saw that there was inevitable what happened in 2008, that they just extended it. They just printed a mass amounts of money. We've seen people are starting to lose all their purchasing power. There's so many bad symptoms that have come out of this currency manipulation that they've been doing to prop up the monetary system. So you need to prepare yourself to get out of the system and start to learn about things that could circumvent you from being completely devastated in a bail-in or bailout of a bank that you might thought that your money was safe in. Because you got to remember, your money is not yours when it's in the bank. It's the bank that is actually borrowing it from you. And then, well, today almost all banks are not even giving you an interest back. You actually have to pay for that bank borrowing the money to them, which is ridiculous. As a person that would borrow money, like, why would you do that, right? And then of course you need to find ways to get transact that money outside of the banking system, and that's where cryptocurrencies comes in. You know, got Bitcoin, Dash, EOS, Monero, all these different cryptocurrencies that you could use to circumvent the banking system and have it a peer-to-peer transaction without mass amounts of fees and interest and all this stuff that the banks used to rip
and
you
restrictions
off. Yeah, exactly. So you would be so much freer in that system. And on top of that, you should have insurance, which is, of course, you talked about the most important ones, which is food insurance, which is water and food, and kind of protection, which is gun, But then lastly, it's with the wealth insurance through any economic calamity on a large scale like this. When you have a huge debt calamity, you're not going to just see a lot of people believe that, oh yeah, we're all going to default on our debts and then that's going to be it, and then we're just going to continue on after that. No, that's not what's going to happen, because if you listen to the 2002 Ben Bernanke speech, he said it so well of what we need to be prepared for. He said that, when if we get deflation, we just have to understand that the powers of the printing presses will reassert themselves, and they will eventually win. So yeah, if you get a massive deflation, but the problem is they can't control that because they try to control it, and then it'll get out of hand, and then suddenly you got to remember the history tells us at one point when the currency becomes so worthless to the populace that the salaries and everything that get paid in, they can't afford food or just basic needs in their lives. That is when the revolution starts. That's when the hyperinflation starts and the currency collapses. And that's when people have to have the other things in place. They need to know about them in order to use them to transact, or else they're going to end up like actually in Cyprus, people lost their money in balance, but they also used cryptocurrency and Bitcoin to circumvent all the capital controls, all the government control, right, at the collapse of it. So yeah, it's so important to educate yourself financially and get ahead of the curve.
Yes.
So you're not going to get stuck, because I don't want anybody to be hurt in this calamity, but it's going to happen. It's inevitable. A lot of people are going to get hurt, but please, please, please don't be one of them, and financially educate yourself so you can put yourself at a better place, and hopefully your family and friends as well.
Yeah, and of course, Bitcoin was invented as a means to combat something like a major crash, and it's the first time we'll ever see it really play out. This coming crash, this calamity that's inevitable. Can't put a date on it, but we know it's inevitable. Yeah. I've been talking about this stuff. Like Wham actually just hit its 6th birthday on March 1st, by the way, and I've been talking about this stuff since 2006 overall. And obviously, when I was younger, just watching Ron Paul talk about this, and everyone called him crazy. Everyone called him an idiot, and obviously we know what happened next, and now they're calling him a crazy idiot again. Well, it's like clockwork after a while.
Yeah, I just gotta say one last thing. I actually have my birthday too last Monday. Not to talk about my birthday, but guess who was here at my birthday spewing garbage out to the populace of Manitoba? Well, it was none other than the bank bailout machine himself, the guy that actually made this possible, the chaos that we're seeing today, Barack Obama, that destroyed the U.S. economy by bailing out the corrupt cartel banks. Yeah. They're terrorists.
Yeah, and of course, he probably had a gun to his head like all these presidents. In the end, it's a symptom of a serious cancer we call central banking, central planning, legal tender laws, and the use of force against the public by a major organized crime racket we call government. So anyway, we'll continue to talk about this stuff. I've been in San Diego for a few days just to take a short break from just nonstop because of the shadow banning here on YouTube. It's like 1 or 2 videos a day, and still only reaching about a third of the people people with 2 videos a day on YouTube as they are really cracking down on us, and it's really brutal. So anyway, we'll keep updating you with much more. I'm about to get back to doing a bunch more videos all day, every day, but it's worth it because eventually, like I said, I have optimism because, you know, looking at this stuff back in 2006, the amount of people today that are talking about this situation is so much greater than back then. And you would hope it would be everyone, considering we should have learned our lessons from all these problems having happened already just in the last decade and a half. But anyway, we will continue to learn our lessons. Not everyone can be saved from the inevitable here, but obviously we're going to do whatever we can to make sure that you out there learn about this stuff, you understand it, and you take the proper actions to ensure that you are safe and your family's safe. So anyway, thanks for talking about this with us, John, and until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
Be the change.
Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so heavily demonetized and censored by YouTube as these guys come in and flag all of our content as hate speech. The shadow banning is getting really bad, guys. Also, check our Bitcoin address right here on the screen or in the description below. We really appreciate it. And of course, check us out at the Red Pill Expo 2019. Of course, the great G. Edward Griffin and so many other incredible speakers will be there. Our link for that is below as well. And we cannot forget Mike Maloney's goldsilver.com, which you can also find in the description. One of the greatest market and monetary historians out there. We really encourage everyone to check that out. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.
Thank you.